tradingstrategy.com.
Hi, this is Chris again, looking at the upcoming Monday, August 4th trading session. In front of you I have the economic calendar open, and the first thing that you see, of course, are Japanese numbers, monetary base end of period. These are low-level events, and really what I believe is, at the end of the day, what we need to pay attention to is how the Nikkei reacts to the non-farm payroll numbers that came out on Friday, just a bit under expectations. This is because, as you know, the Japanese have not had a chance to react to anything, so I feel that the Nikkei will probably continue to fall a bit, looking for support somewhere closer to the 15,500 level. It's not to say that these numbers can't move the market, but they would have to be so far out of balance that the likelihood is slim to none. We have Australian retail sales, ex-inflation quarter over quarter for the second quarter, expected about 1.3. The reality is, though, with the RBA's recent action, it's probably not going to have a massive effect on the market. Swiss Purchasing Managers Index, or PMI, this is a regional number, will affect the dollar-Swiss pair. Anything below 50 would be a shock and have money heading to the dollar probably quickly. Anything above, anticipated as an expansion, probably won't move the markets. Really, construction PMI could have an effect on the British pound and or the FTSE. British pound's looking pretty weak at this moment. Any good news will help at this point. The ISM numbers out of New York, probably not expecting too much out of that, although it could have an influence on a market that's already been a little bit shocked in the American indices. The S&P 500, for example, is sitting right on an uptrend line, and if we can break the top of that range, very likely that the S&P starts climbing at that point. Probably a consolidative day, though, so I would look for very quiet markets. Looking at the euro dollar, you can see that we rose during the session. Two hammers previously to that probably suggested this anyways. We expect to see selling pressure come into play about 135. Any rally more than likely will run into sellers. It's a massive downtrend, has been for a while, so quite frankly, why fight it? We're going to let the market come to us. The closer we get to 135, the quicker we start selling the euro dollar pair and start buying puts. The aforementioned British pound looks horrible at the moment. We have broken down through a trend line of sorts during the day on Friday. So now we have to start thinking about whether or not horizontal support is going to hold. 168 matters. It goes down to 167 at that point. Really, though, we need to see a bounce soon, and we should, considering it's so oversold. And if we don't, things could get really ugly in this market. We would be very hesitant to sell this market right now, though, because it's just a bit overdone. Look for a bounce, perhaps selling from a higher level. Looking at the S&P 500, you can see we had a pretty brutal day, as is pretty much typical of non-farm days. We broke down through the trend line, but it did hold. So with perhaps a little bit of value buying, or the ISM numbers being stronger than anticipated, if we can break the top of this candle, we feel that this market has plenty of room to run, probably to about 1960 or so. So above 1938, we'd be buyers. On the other hand, if we broke down below the 1915 level, probably going to have a little bit of a fight at 1900, but that would in fact be a pretty negative move. With that, we've looked at the Monday, August 4th trading session.